Welcome back to the channel, everyone. This is it. The super earnings week we've all been waiting for. From AMD and Qualcomm in tech, to McDonald's and Airbnb in consumer, and even heavyweights like Pfizer, ConocoPhillips, and Figma, this week's earnings could decide where the entire market goes next. After a solid October rally, the S&P 500 is up over 4%, but sentiment feels fragile. Investors are asking one question. Is this rally built on real earnings or just AI-fueled hope? We're entering a week that could make or break Q4, revealing whether corporate profits can hold up against sticky inflation, higher interest rates, and slowing global growth. Over the next few minutes, we'll break down this massive earnings lineup by sector, tech and AI innovation, consumer and services, healthcare, energy and industrials, and show you which companies matter most and what signals to watch, because by Friday, we'll know if Wall Street's soft landing dream is still alive or about to get crushed by hard data. So let's jump right in. Here's what you need to know heading into the biggest earnings week of Q4 2025. This week marks one of the most critical moments for the stock market in 2025. A true super earnings week. We've got heavy hitters from nearly every sector: AMD, Qualcomm, Figma, McDonald's, Pfizer, ConocoPhillips, Airbnb, and many more. Investors are heading into this week with cautious optimism. The S&P 500 has climbed more than 4% over the past month, driven by cooling inflation and excitement around AI. But now comes the real test. Can corporate profits actually justify those gains? The key theme this week is profit resilience. Companies are still navigating higher interest rates, slowing global growth, and margin pressure from rising labor and input costs. This round of earnings will tell us whether the so-called soft landing narrative still holds, or if cracks are forming beneath the surface. For tech, we'll see if the AI boom continues to fuel earnings growth. For consumer and energy names, it's all about spending habits and commodity prices. And for healthcare, investors want to know if the sector's defensive strength can carry into 2026. Bottom line, this week's reports won't just move individual stocks. They'll help set the tone for the entire market heading into year-end. This week's spotlight belongs to tech. AMD, Qualcomm, Figma, Unity, Supermicro, Datadog, Airbnb, and ARM are all reporting. And their numbers could redefine market sentiment around AI and digital growth. First up, AMD. After months of anticipation around its AI GPU roadmap, investors finally get to see if revenue growth matches the hype. AMD is under pressure to show that it can close the gap with NVIDIA, and any signs of data center traction could spark a strong rally or a sharp correction. Qualcomm, on the other hand, represents the edge AI story. Its new Snapdragon chips are designed for on-device processing, and the company's guidance will reveal whether that demand is materializing in smartphones, PCs, and automotive applications. Then there's Figma, the design software darling reporting its first earnings since going public. This one's big. The entire SaaS sector will be watching to see if investors still reward growth over profitability. If Figma shows strong enterprise adoption and steady margins, it could reignite optimism in cloud-based collaboration tools. Supermicro and Datadog will give us insight into cloud infrastructure spending, a critical barometer for the broader tech cycle. Finally, Airbnb's numbers will act as a macro signal. How confident are consumers in travel and discretionary spending? If bookings hold up despite inflation, that could reinforce the idea that U.S. demand remains robust heading into 2026. In short, this week, tech earnings aren't just about numbers. They're about confirming whether the AI revolution is real business growth or just narrative momentum. Now let's shift to the consumer sector, where we'll see just how strong household spending really is. Companies like McDonald's, Wendy's, Beyond Meat, DraftKings, Dutch Bros, Goodyear, and Norwegian Cruise Line will paint a clear picture of how consumers are coping with inflation. For McDonald's and Wendy's, it's all about pricing and volume. Are people still eating out or trading down to cheaper meals? Fast food has become a key inflation indicator. If traffic slows, that's an early warning sign of tighter wallets. Beyond Meat, meanwhile, continues its long struggle. Investors want to see progress on profitability and demand recovery, but the stock has been punished for weak sales and high cash burn. A strong quarter could spark short-term relief, but confidence remains fragile. Then we've got DraftKings, one of the few post-pandemic consumer success stories. Online betting continues to expand across states, and consistent growth here would show that consumers are still spending on entertainment, not just essentials. And Norwegian Cruise Line, the travel rebound play, faces a mixed outlook. Bookings remain healthy, but fuel costs and macro uncertainty could pressure margins. Management commentary on forward bookings will be critical for travel and leisure investors. Bottom line, the consumer sector will reveal whether spending habits are bending or breaking under inflation. This will directly influence sentiment toward retail, services, and even the Fed's next moves. While tech and consumer sectors dominate headlines, the healthcare space quietly carries the defensive backbone of this earnings season. Major names like Pfizer, BioNTech, Humana, Novo Nordisk, AstraZeneca, and Moderna are all on deck, and their results will shape investor positioning for 2026. Pfizer and BioNTech are in the middle of a critical transformation. With COVID vaccine revenue fading, both are banking on new drug pipelines and oncology assets to restore growth. Investors will be watching R&D updates and guidance for non-COVID segments. Novo Nordisk remains the market's golden child. Its weight loss drugs, Ozempic and Wegovy, have dominated global headlines and driven record profits. The key question: can it maintain supply and pricing power amid growing competition from Eli Lilly? Humana and AstraZeneca will shed light on healthcare spending trends, insurance margins, and government reimbursement rates, all important macro indicators of inflation in medical costs. And finally, Moderna has a lot to prove. After its pandemic peak, the company is betting on new flu and RSV vaccines to build a second act. If management shows clear traction, this could mark the start of Moderna's post-COVID renaissance. The broader takeaway: investors are still rotating into defensive names, but they'll only stay there if earnings confirm stability and consistent cash flow. Rounding out the week, we have a strong lineup of energy and industrial giants: BP, ConocoPhillips, Diamondback Energy, Vistra, Fluor, Duke Energy, and Kinross. These companies are the pulse of the real economy, and their earnings will tell us how resilient the global demand cycle really is. BP and ConocoPhillips remain in the sweet spot of high oil prices and disciplined capital spending. Investors want to see if that discipline continues, or if rising production costs are beginning to erode profits. Diamondback Energy offers a domestic read on shale activity, while Vistra provides insight into U.S. energy infrastructure and power pricing, key for inflation forecasts heading into winter. On the industrial side, Fluor represents infrastructure and construction recovery. Any signs of backlog growth or new project wins will confirm that the post-pandemic build-out continues. Duke Energy, meanwhile, reflects the utility sector's balancing act, managing rate hikes, grid modernization, and clean energy investments all at once. In short, energy and industrials don't get the flashy headlines, but they determine whether the soft landing extends beyond the tech story. If these companies deliver strong guidance, it means the underlying economy remains solid, and the bull case for 2026 stays alive.